Hey, is it working? Oh, it is. Oh, how exciting. All right, okay. So you are listening to The Dip by Acme Podcasting Network. I'm your host, Dan Kemmis. Let's go over just a couple of quick topicals, and then we'll bring our subject matter expert onto the line, Matt Baltz. He's a smart guy. We like Matt. It's 3:10. It's the day after, right? So Europe's down about 10%. Just in terms of their stock market. It's kind of interesting today. That was this morning. A couple of different countries are kind of on lockdown, Italy, Israel, etc. The international reaction to some of our leadership's outlandish behavior, really prevalent, really noticeable. And then we've got things going on like the city of New York's making its own hand sanitizer, right? And then one of my pals actually called me up and said, you know what, Dan? Sell everything and buy some gold. I thought that was funny. And then last but not least, it's just worth noting. You know, for all of us, it's a funny time. I have kind of a personal concern during the crisis. I have a beautiful love who suffers from asthma, right? So that whole thing where it's just a funny time. And then we get all these mixed messages and all of this. So this is part of why The Dip, basically Matt's level, okay? He's a thinker. We like him. And one of the things that's neat about him is he's accountable. So we're going to hit him with some hard questions today. We're going to ask him a little bit about, hey, if I had some bread, what would I do if I wanted to play high risk with the market right now, right? We're going to take a little bit of time to just muse a little bit about, hey, in the state of the times, what are some things we should be worrying about or thinking about with regards to market opportunities. Last but not least, after we're on the call with Matt for a little bit, we'll just go over a couple of numbers, some kind of key indicators and such as we start to build our knowledge base. Today on The Dip, pragmatic financial advice during uncertain times. Hang on a sec, let's get Matt. All right, okay, so now we've dialed out and we have our subject matter expert. Once again, your name for the record, sir.
My name is Matt Baltz.
Wait a minute. I read a disclaimer about you in our video that we publish. That's our retelling that basically says you're an experienced guy with a lot of history and that you know some things about finance and financial advice and all of that stuff. Is that fair to say?
Yeah, that is fair to say. I was in the business for about 22 years. No longer licensed, so I don't offer specific investment advice to people, but still try and help people learn about the thousand things you can learn about in the financial and investment and tax and estate planning markets.
Great. Well, okay, so let's just start with this. Hey, Matt, looks like the crisis is over. I saw the market's up 1,000 points. I guess it all turns out okay, huh?
That's funny. We actually, I think it was because of something that we had talked about that might happen when we talked yesterday, that the Fed or the government would go into their trick bag and come out with something to potentially increase confidence. And it looks like they may try and change the federal tax payroll amount. So
right,
a nice headline to start the market off up 800 this morning, but over the first couple hours, it dropped all the way down to negative. And then, came back up. I think it finished around 1160-ish.
So I think you know this, and our listeners, they'll learn this. I am a voracious, curious, I'm a data hound, right? So I've gone back and I've been looking at previous tumultuous events, and in specific, frankly, I've been looking at the end of the 20s. And what's interesting is some of these trend lines look really, really similar, brother. So is there such a thing as a dead cat bounce? So if you don't know, a dead cat bounce, the idea is that, okay, you have something go in free fall, it hits for a little bit, it stops for a moment, and then it goes right back in free fall. Do you believe in that, Matt, or is that something that's antithetical to your thinking?
No, actually I do. And that was one of the first industry terms that I had heard, way back 20 years ago. I'm like, hey, that's a cool term. I like this business. But the thought of if anything falls from high enough, it's going to bounce. But from a technical standpoint, the analysts or the trend or momentum people, they like to see a 50 to a 66% retrace of the fall. So even just on a 1-day basis, yesterday down roughly 2,000 points. A retrace of 1,000 to 1,200 is what we see. And so for people watching at home, the thing we need to see is it looks like we're seeing is lower highs and lower lows. So so it kind of fakes people out. They go, "Oh, everything's great," and they start buying again, and then the next down leg kicks in.
Sure. So, okay, for starters, I got to tell you, I so appreciate having the depth of your knowledge here in our fledgling effort. It's so I feel like we're way ahead of a fledgling effort, frankly. So, okay.
Well, thanks, Dan.
Yeah. First, just from a practical standpoint, hey, if I'm looking at all of this chaos and I'm thinking to myself, geez, I've got a tax return or I've got some bread that's just sitting there that I want to do something with, what would be an example if I had maybe $1,000 or $10,000 of a high risk market play that if I watched really, really close, I might win on over the next couple weeks or months? What would be an example of that sort of thing?
So the high risk would be options trading. So you can buy the right to buy stock at a later time at a set price. So you get good multiple on your investment. So $1,000 you might be able to control, $5,000 worth of a stock. So if it goes up 20%, from 5 to 6, then that $1,000 you're actually up 100% because you only had to put $1,000 in. But
sure.
On the flip side, if the numbers don't work out the way we want them to, you could lose everything.
Really. So
yeah.
In that sense, I mean, here you go. What percentage of investors have that kind of risk in play?
I'd say it's probably less than 20%. And then those that do, it might only be 5 or 10% of their portfolio.
Sure.
So it's a small fraction of it, but it's gambling basically. But,
right.
Educated gambling, maybe some might say.
Right. Having some determination over the at least the perception of the odds and all of that, and at the same time, the truth is, it's high risk for a reason, right?
Right. No, yeah, and then you can buy index funds, and over the last few years, they've come out. Well, I guess maybe the last decade or so, they have leveraged and leveraged inverse. So if you want to play the S&P 500, you can bet it 1 times index, 2 times, 3 times, or you could go in reverse and bet against the index on a 1, 2, or 3 times multiple. So in a 7% down day, those inverse funds were up 21%.
Wow. It's like going to the track and betting on a trifecta or something. It's really surreal.
No, and there's not a lot of differences really. There's a lot of risk in that environment.
Well, so now context is everything in my world. So a little bit of context. So I went this morning. I go walking into a coffee shop. The owner and we banter. We were bantering, and it essentially created a couple of questions. And then I was really surprised. The questions themselves started out kind of frivolous, right? Basically, hey, should I buy some Bitcoin? Hey, what's a good medical stock to invest in or research, all of this. And then I had this heavy load dropped on me. So I'm just going to take us through a couple of the questions and maybe you can guide us some, okay? So,
sounds great.
First, okay. Hey, do I want to buy some Bitcoin right now? I mean, so not just Bitcoin, but we'll say, okay, cryptocurrencies and these kinds of things. Hey, we're in the middle of a tumultuous storm. Does that make sense?
Potentially. I own some cryptocurrencies. I've been trading them for a couple of years. I traded them a couple of years ago. I got in when the market was about 150 billion, ran it up to about 800 billion. So did really well across the board. And then it's tanked ever since. Those are down 80, 90%. So it's a very volatile market, but for people that have what I like to call gambling money or highly speculative money, if you're going to Vegas or you'd rather not go to Vegas and you want to buy some options or buy some cryptocurrency, that's kind of what I did. But, it's highly volatile. Without knowing somebody's financial situation, I couldn't say to buy either way. But the reason I bought was for diversification, and they think that is the money of the future. That we're paying bank fees, we're paying wire fees. Banks aren't open. So, some of them are open Saturdays, but they're not open 24/7, 365. And the crypto world is. And sending money to your family and friends overseas, you can send it for, 15 cents versus going to a Western Union, taking cash out, wiring the money, paying fees on both sides. So there are a lot of good things about it. But, there's, last I checked, there were over 7,000 different cryptocurrencies. So
Oh man.
I wouldn't recommend buying anything other than maybe the top 10 or 15 by market cap.
Wow. Okay. That's interesting. And then is something like that directly, do you see a correlation between the chaos of the times and that kind of decision set, or are those separate?
They were the 2 weeks ago or 3 weeks ago when the market started getting beat up by the coronavirus, the crypto markets really took off. But this past weekend there was a crash. So they started correlating this weekend. So there's, they're relatively new, so not a lot of long-term data testing. But for the most part, short answer would be, say 75% of the time they do not correlate to the market, so they provide a good hedge in somebody's portfolio.
Interesting. Basically, they zig when we zag, and so let's do that kind of.
Yeah, no, exactly. And then banking, when there's any headlines that say the banks aren't doing well or they're losing money, then people look at cryptocurrencies and then some of the projects behind them. So nobody has a crypto ATM on every corner. So that until that happens, we won't see mainstream use. But there's a few companies trying to do that. So those are interesting ones. You get the currency play and the fear, get into a non-correlating asset class. But you also have the growth of some of these companies if they're successful on executing their business model.
Wow. Okay, so now that's interesting to me because full disclosure, and I'm sure my audience can tell, hey, I'm learning as we go. And this is part of the reason I do these things. So Acme Podcasting Network, we are a content aggregator. So we go out and find other content and bundle it along with a content originator. So in this case, I literally make the show to illustrate that, oh my God, this guy can make anything. And then last but not least, hey, I'm self-serving. I'm using this as a way to learn more about personal control of my own financial future. So, I appreciate everybody dealing with my process. So Matt, I'm in the coffee shop this morning and somebody said to me quite literally, hey, I'm refinancing right now. Should I? And I'm like, first, I don't know, but okay. So in this kind of financial environment, again, this is another broad question. In this kind of financial environment, should I just sit tight or should I still consider like the normal tools of, hey, I want to leverage my house and get some resource because I'm going to make a new garage or whatever? Do I sit tight or what do I do with that stuff?
It varies for every person. So you'll hear that as my standard disclosure. But,
of course.
But I would look at refining right now. Rates are down again, and maybe starting the process of interviewing mortgage people or looking online. But just because I think rates may go down a little bit more here, the Fed may drop them another quarter or a half point maybe in the next 1 to 3 weeks. But last I checked, they were under 4. So historically, if you can lock in long-term money under 4, that's a great interest rate.
Wow, right. And then that whole thing, right, of because everybody is compartmentalized. It's interesting to watch people. I'm in Seattle. A whole lot of people are thinking about. It's like they're detached, right? And that whole thing of like, yeah, you got a lot to think about. One thing to think about is how to take advantage of essentially moments of chaos or the opportunities that are created by new normals and things along these lines. I have one final or one other thought on refis, if you like. Yeah.
Would be to a lot of people get in the trap, say you're in a 30-year note and you pay it down for 5 years and then rates drop and you refi and then you got another 30-year note and you lost 5 years. And so what I usually recommend is to refi, pay less interest to the bank or to the mortgage company, but keep your same payment.
Right.
So in that case, say you're paying 5% interest on a $200,000 note, that's 10 grand a year in interest, and you refi it down to 4, you're paying 8 grand a year. We'll keep that 2 grand going to the note. You'll actually pay the loan off quicker and pay less interest.
Sure. Right. And being attentive, right, to a condition or a state change in your financial portfolio, right? The nature
Right.
of, oh my gosh, an opportunity's presented itself, quick, go capture that. So
Yeah. Well, then, and I like to see people have their house paid off when they retire. And so, if you refi 2 or 3 times over your working career and you just keep adding time on to the end, you don't get it paid off. So that's a way. Some people might even look at, maybe they're 10 years into a 30-year note and they have 20 years left. And with the lower rate, they could move into a 15-year note and have the same payment.
Interesting. So now, okay. Kind of a morbid note. It was a little bit hard, actually. I'm in the coffee shop, and again, it's more a nervous laughter. Personally, it's not a ha-ha. I'm in the coffee shop, and then the next question comes up. Somebody's like, "Hey, my mom is in assisted living. She has COPD and heart disease. I don't think we've got all of our affairs in order. I don't really know. What do I do with this virus going around that may well, it ups the odds that mom's going to be gone tomorrow?" And I was like, okay, now that is a classic example of why we do this work, in that that's a real-time question right there, in the field, by somebody who's literally processing COVID-19 and their family. So, okay, first, I got to think they're probably not alone, right? There's probably a lot of people who actually have a bit of a reckoning coming from the perspective of, do I have everything signed?
Right. No, and that's a big one. And I guess maybe that's a good thing about the virus, is it's forcing people to think about it. But, hopefully that person's mom lives as long as she wants to. But at some point, they're going to need the documents anyway. But yeah, when a person passes away, if there's anything titled in their name, the institutions that control that are going to need some paperwork to get it out of her name. So I'm not sure the rules in Washington. I live in California, but for an estate over 150,000, if there's no trust, that estate will go to probate, and there will be probate fees, attorney fees, court fees, and delays. So anyway, I guess without knowing a person's situation, if in California, if they're under 150,000, they can do a mini probate or things. So, but to back up, I guess the main thing would be you either do a joint tenancy for that person. So if their mom owns the house that she lived in for forever, and now she's in the assisted living home, she can add one of her children or all of her children on title to the house. But the cleanest thing to do is just to set up a living trust. And that can be done by an attorney that's, $1,500 to $2,000 maybe. But you can go to nolo.com, NOLO.com. And if you're good enough to run TurboTax and do your own taxes, they kind of set up Nolo to be that way, where people can do their own trusts.
Nice. Yeah. This is what triggered me in all of this is this. So I'm a armchair study in statistics. And then, again, it comes across as a morbid discussion, but statistically, if I have a 1 or a 10% kill ratio, and I have 100 people infected, or 1,000, or God forbid 10,000 people infected, and then just running the math backwards and saying, well, okay, N percentage of these people are at high risk, and then what percentage of that group? I've been there. I've been in the place where a family member was dying, literally, and there were things that were unsigned. And it took a tragedy that was, monumental, and it made it so much worse. So,
unfortunately, I've seen a lot of horror stories there. I've seen siblings that no longer talk to each other because they had to go through settling an estate or trying to determine what mom and dad's wishes were after mom and dad are gone. And
right?
Can't be, yeah.
Oh my gosh, right? And this is the thing is, again, certainly in the time of trouble, in the time of a complex moment in our society, I guess, I would just remind everyone, look, here's the thing. Try and make it fun, right? Try and enjoy the various experiences, and at the same time, Stay active. Procrastinating isn't going to do a lot for you, which, actually, let's do a commercial. We're going to do a commercial right here. Hey, you know what? I like you, and I appreciate you listening. Really, here's the deal. If you like what we're up to, would you like, share, and subscribe? And if you don't, would you do us the kind favor of telling us why? Because we do. We appreciate your feedback, and we appreciate you taking the time to listen. There we go, Matt. That was my commercial. You like that one?
Oh, perfect.
Sweet.
Thanks, Dan.
Sweet. Okay. So, So I guess if I think the family's in duress and I'm taking note of the moment, the watchword advice would be what? Contact my financial advisor and just express to them, hey, I want to get this stuff cleaned up?
Yeah. So either an outright gift or that could have some tax implications. So a tax person might need to be included as well. But they need really an estate planning attorney, but those people may start charging a lot. So I would call or ask friends and family and ask for a free consultation. They may give you, somebody a half an hour to say, yeah, this is what we do. This is what it'll cost. And this is how we'll help you from A to Z. I've seen some that just go A to B and charge you, and you don't get what's called funding the trust or retitling those assets into the name of the trust. And if that isn't done, then the trust is almost worthless. But there's some nice things in it too. I don't know Washington, but I assume it's the same as California, but it also comes with your living documents. So you have a medical power of attorney for financial decisions and a medical power of attorney for your healthcare decisions. So if you're in a coma or you're in a car crash and something tragic happens and you can't make your own decisions, then there's documents that are included with most living trust kits or packages that will include those things too. So you get a lot of value. And, I got one, we got our trust when I was 30 and I wasn't, planning on dying anytime soon, but at that time it was for our minor children and our healthcare directives.
Sure. Well, so, okay, this would be a perfect time for this. So, you sound nice and smart. So if I'm like, oh, I want to get some advice from this guy, how do I contact you?
Email is the best, and then we can arrange for calls or meetings or video conferences. My email is baltzmatt@yahoo, baltzmatt@yahoo.com. I'm not a licensed advisor, so I'm not able to give exact specific investment advice, but I help people identify their goals, their objectives, run projections, look at the economy and different asset classes and see, stocks, bonds, and mutual funds everybody talks about, but real estate and precious metals and private equity and cryptocurrencies. So I'm able to provide a lot of general information to help point people in the right direction.
I dig that. Hey, on a lighter note, so then, I run with a diverse crowd. One of the prepper homies said to me, sell everything and buy gold, Dan. I mean, what do you think? Are we there? We're not there.
I like precious metals as a part of the portfolio, but no, anytime you can do everything, that's a scary thought. Gold, I think, just passed or reached its point from where it was in 2012. So if everybody had sold everything and bought gold in 2012, they wouldn't have made anything the last 8 years.
Wow.
But yeah, I buy gold and silver, and some of it is on the prepper side. If something goes crazy and the banking system shut down for, a few days or a few weeks or whatever, then I think silver coins would be tradable for food, and at some point gold coins or pieces of gold, which is why I go with silver. They're smaller and easier to trade for a loaf of bread.
Well, and I can afford silver. Okay, I'm in on silver.
Yeah.
Too funny. Well, okay, so if you don't mind, it is the dip, okay, and then we're watching some things. I like to tell people where I don't mind being wrong with my future predictions, okay, and I got to tell you, the more research I do, the more I say to myself, you know what, we're in for a while of real tumult, right? It's going to go up, it's going to go down, it's going to go up, it's going to go down, and I kind of personally think it's going to go down. So, are you willing to hang in and continue to advise on the show a little bit, and we'll kind of play it by ear and take it as it goes?
Well, certainly, and yeah, I tend to agree with you. The market hates fear, or actually, the market hates what it doesn't know. And right now, since it doesn't, there's a lot of things it doesn't know, or then fear is the result in selling. So, and really, it gives people a good opportunity to take a look at their portfolio. We see a huge down day and a nice up day, and why are those things happening? The exact same thing happened in 2008. So, if anything, it's good for people to take a look at it and see how they feel about their risk exposure. We've been on a darn near 11-year bull market, so I think a lot of people got complacent. Just every quarter, my money is worth more. My 401k went up, and I don't know why, but it's great. I'll just keep going. So it's good to take a good look every now and then.
I guess we'll close out with this today. So I am a very curious individual, and I'm pretty high energy. I was up early, and I've been watching the kind of a mix of international feeds, regional feeds, etc., doing a lot of basically data aggregation. One of the things that's really stark is how much essentially almost befuddlement and mockery there is around our own bad leadership, right? You're seeing more than a few that basically are just quizzically scratching their heads saying, what in the heck is going on in America, right? And so that whole thing of, ultimately, I think I might agree or disagree with you, but if I see competency, boy, that just, I like that. You and I might disagree philosophically, but geez, you know what you're doing. That is so different than some of the things we're seeing. And I guess, to me, that's part of why the title, The Dip, in that, in a lot of ways, I think this economy, I think we're going to see some things that are going to require people like you, Matt. I think we're going to need a lot of advice over the near term, I guess would be my point. So.
Yeah, no, it's scary, and I certainly don't know everything, and so I pull on my experience of having gone through several downturns and trying to understand why, and I'm a natural skeptic, so that, that good or bad, that helps to try and find more information as well. But yeah, all we can do is keep asking questions and trying to find answers that sound good to us, and then translate that into how that affects our family and our lives, and that's the best we can do, really.
I dig it. Well, so I'm going to turn off the recording. I'm going to leave you alone this afternoon, but I'll send you some more email. And hey, I do very much appreciate your help here with the Acme Podcasting Network, the show called The Dip, Pragmatic Financial Advice During Uncertain Times. Thanks a lot, Matt Baltz.
Well, yeah, thank you, Dan. Hope you have a great afternoon.
Thanks, brother. More to come.
Okay.
Acme, Acme, Acme. You've been listening to the Acme Podcasting Network. Gosh, we really appreciate you. Thanks for the listen. And do us a favor, like, share, and subscribe.